Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 170 of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, is the main man of the hour, Mr. AJ Brown. Happy February, AJ. How are you doing this morning?
It is February. I'm doing well.
I can't believe it. The second month of the year has approached us quick. And just as last week, we started off Monday, even if not that Sunday session, with a lot of drama, a lot of hoopla. It's the theme for our background for today, and that's the trade wars, the tariff wars. I guess, we got a lot to cover this week, but that was kind of the storyline to begin the week. What are your thoughts with what we saw in that retrospect to start the week?
I mean, that was going to be really, really interesting with those tariffs. But, last minute deal for both Mexico and Canada. I guess the lasting thing, though, is that there is a 10% tariff that has been added to China. So we'll have to see how that plays out with a lot of the imports and exports.
And when we look at the market reaction, it seemed as if it was pretty, over exaggerated to start Monday, and then it seems as if President Trump had a call with the Mexican president. President Trump had a call with the Canadian president. We got an extension for a month, and the market seemed to kind of creep up through the rest of the week until today. It seems as if we're getting a little bit of drama with that employment number.
Yeah, yeah. Initially, that employment number, it was being digested pretty well by the pre-market session, but I think a lot of investors are digging deeper in the actual numbers of that employment report, and they're a little bit concerned. But yeah, going back to Monday, I mean, it's almost like it was, and you can see it in the charts. Let me remove some of my chicken scratch here, my overlays, and let me show you. I mean, it almost looks exactly like what we had last week when we had the deep seek upset on Sunday night, and then the market recovered throughout the week. Well, we had the tariff upset on Sunday night going through Monday, and we recovered through the week. So I wonder if we're going to just start seeing the crazy headlines every Sunday, and it's going to be this kind of pattern every week. It looks like I mean, we're 2 for 2.
Yeah, well, this Sunday, the crazy headline could be the Kansas City Chiefs winning 3 Super Bowls in the row.
Is that who you're favoring?
Of course not. I do not want to. I'm rooting for my man AJ Brown to catch the game-winning touchdown for the Philadelphia Eagles. But I could imagine that there not be any drama this weekend. However, Mr. Trump is going to be attending the Super Bowl, which I think is kind of rare for a president to go to the Super Bowl. But this guy is unlike anyone in history.
You know what?
Um, and so, looking at the charts, I guess this bodes well for our approach and your approach
Oh,
in the
absolutely.
community, right? Because it's chop.
Absolutely.
That's like 3 weeks of chop I'm looking at.
Yes, absolutely. So, a couple of things to pay attention to. Now, I made a big disclaimer last week. So, if you guys missed last week's show, you may want to check it out. Make sure you subscribe to our channel so that you get all those notifications. But, one of the things that I said last week is we're in for a lot of news driven movement of the market. And so, you know, a lot of folks rely on technicals, especially the folks who watch this show. You rely on, different indicators, the RSI, the MACD. Those are some of our favorites. We love our Williams percent R. These indicators are based on patterns repeating themselves. And when they're hit with like news driven data, it kind of throws them off and you can't trust them implicitly. You need to have definitely some validation, some confidence builders to whatever signal you get. Still, what do we have to fall back on? We've got some order flow. We can always fall back on fundamentals. I've got my indicator installed, so I want to go ahead and pull that guy up. And now that I've got my indicator on, you can see that we got yet another bottom reversal confirmed. So if I overlay my reversal drawing here, what you're going to notice is, first of all, we've now got 2 tests of support and 2 tests of resistance. In the retracement world, retracement analysis world, we call that a mature trend now, because we can now start drawing our support and our resistance lines. But also, you want to notice one more thing. So I've got another overlay here. This is the overlay where we have our rulers applied. The first move we had out of the gate in this new medium to long duration trend was in the green zone of my ruler, which means it's an ideal uptrend move, but it was just one. So then we got our range contraction move into the magenta zone. In fact, if we look at the exact number, it retraced to what? 42, 40, almost 43%. So that's smack dab in that magenta zone. That's a second ideal move for an uptrend. Still, again, I come back to, this has got to be news driven. These are not patterns. I mean, when we look at kind of the stuff that we've just seen in the last 2 weeks, it bodes for a different type of market. But, we're going to see where the next reversal comes. But if the next reversal comes up in this green zone, we're going to start thinking about things like swing trades. We're going to think about some more directional moving option strategies. But right now, I mean, Cyprian called it. This is some sideways chop if I've ever seen it.
And I know that some of your strategies are driven by the volatility.
Mhm.
What can volatility go up and the market kind of stay sideways? Is
Oh,
is that like
absolutely.
a precursor to like the anxiety building up?
Well, yes, and it also could go up, and I'm pulling up the VIX here. It also can go up, but amount to nothing. So, the anxiety, the volatility, you can kind of measure those things and say they're the same, because, and I'm speaking specifically of implied volatility, the volatility that we get by reverse engineering the options market, right? So people use options as hedges. They use options as hedges when they're more fearful, when there's more anxiety. When they use options as hedges, when they're more fearful and anxious, it causes the options price to go up. And that's the whole volatility to anxiety correlation, right? And so the VIX is kind of a measurement of all of that option, pricing for the S&P 500. And I've extremely simplified it, but when we look at the VIX and we see the VIX go high, we know that investors are anxious and they're hedging their positions more than usual, right? And so we're not on the lows that we saw like 6 months to a year ago, right? We saw like 12s and we're hanging up between 15 and 19, right? 19, you can see my dotted line is at 19. This dotted line isn't one that I arbitrarily drew. This is actually the best fit trend line since the beginning of the VIX in the 1980s. And it just happens to fall at about $19. And so I use that as a kind of guide to know when the investors are starting to get off the rails. And you'll see recently they've been really peeking their heads above that 19 level. That 19 level tells me that we're moving into a more anxious area. Right now, we're trading around 16. That's still higher than before. I'm okay, SIP, with it being anywhere under 26, right? anywhere under 26, it could be anxiety for the sake of anxiety, right? Which is great for people who are selling options like I do predominantly, because people are willing to pay a lot more for the options than they usually are. So that puts me in a pole position. I do worry, like, back on December 17th, December 18th, when it peaked above 26, that's when the fear starts to be and the anxiety starts to be for, more than just because humans like to wrap their heads around the axles. That's when it starts to be, hey, it's something being realized. But if anxiety even brings us up to this 19 to 26 range, us option sellers are going to be in the green. We're going to be a little bit happy about that.
Yeah, and we could obviously see the correlation between the market drops and that VIX pop. Similar uh layout, that just the reverse of what we saw on the SPX. I do have we did have a lot of economic news this week, and so I'm curious if anything from that stood out from you. I know that we did touch on the jolts a couple weeks ago, and that came out this week. I don't know if that rose any concepts for you, or today's employment situation, which I believe is being considered a mixed bag. However, the top line unemployment number at 4% is sounding good to the media pundits, but I think what they're indicating is not any rate cuts for any foreseeable future. Nope. AJ. Oh, I didn't have a question there, but can you hear me
No, I'm
still?
here. I'm here.
Oh, I was just gonna get a layout of if anything stood out to you this week on the economic news
Can
front.
you hear me?
There you are. You're kicking back into gear.
Yeah,
I'm here.
I'm here too. Yeah.
Are you there,
So
AJ? Oh, we got a delay. We
I
got a delay
am.
going
I
here.
am.
Sorry.
I hear you perfectly. Oh, that's okay. That's okay. Sorry about that. It might have been because I was opening up this massive JOLTS report. For folks that, first of all, I want to put out there that the broad market really does move our individual stocks, some more than others. And I think that more than ever, that we take a look at the broad market to understand what the underlying kind of tide is doing, and then we could trade the individual stocks and or the individual ETFs, which are baskets of stocks, kind of understanding what the broad market is doing. So I like to delve into the reports, especially the reports. And I do want to bring up this Bureau of Labor Statistics JOLTS survey that was released on Tuesday. One thing that I've been looking at pretty heavily, Sip, is I watched this. It's right here. Sorry, I went past it. It's the I really went. It might be. Hold on. This is a 21-page report. So sometimes I go job opening hires. Let me keep going. There we go. Job opening level. Here it is. The hiring rate. This is where I kind of zoom in. And you'll notice that the hiring rate is at 3.4%. Do you see that, Sip?
Yep. Let me get this closer on the screen.
Yeah, maybe I can zoom in as well so people can see what I'm looking at. It's right here, this 3.4%. It's been there since about October. Guys, that hiring rate is typically associated with unemployment rates at double what they are now. Right now, they came in today at 4%. This hiring rate has only been seen in history, usually when unemployment's at 8%, right? Like in the 1970s and things like that. The only time we saw this low of a hiring rate here in this century was around 2013 when we were recovering from the Great Recession. And there was a little bit of a secondary slowdown about 5 years after. So this is a little bit alarming. And, there's a lot of folks who come to me that this is a side note. There's a lot of folks who come to me and say, "Hey, AJ, I'm thinking to just become a trader, and I'm going to just quit my job, dissatisfied." I want to, let people know, first of all, I didn't quit my job until my trading portfolio grew to a critical number, right? And this was in the seven-figure number, so that I could continue just living off of it and still have it grow every year, right? I really did an analysis on what my expenses were, including the expenses to run my charity that that was a big part of my life. It still is. So, you know, make sure you're not just quitting your job out of dissatisfaction. And the reason is unless you already have another job lined up, the likelihood that you're going to be able to find another job right now is not like it was a year ago, or even 2 years ago, when there was too many jobs and not enough workers. That's not the case anymore. The hiring rate has dropped so low that if you're dissatisfied with your job, and I rarely say this, when my friends come to me and say, I'm thinking of quitting, my job has gotten so yucky, I'm going to, take a little break, I would say go for it. But right now, I would say stick with your job unless you've got something to catch you, right? Because that hiring rate is not commensurate with what we saw in our employment report.
And in
Now,
the
I just brought up our employment report. Yeah, go ahead.
no, I was just gonna say, and then so how does that translate into today's report?
So today's report, I think what people, especially investors that are delving into the report, are starting to look at is that the actual hirings, remember, the employment report is two different surveys. One survey goes to job creators and how much they're hiring. The other survey goes to, households, about who's employed and who's not employed. So the one survey is saying, hey, hiring is really cutting back, right? And the other survey is saying, hey, everybody's employed. So people really looked at this number this morning and were getting excited. They're like, oh my gosh, unemployment is going down. That's fantastic. But I think the other story is it might be going down in the short term, but hiring is starting to slow down as well below expected. So that's something to keep in mind. Again, that jives with the Tuesday report saying that the employment, hiring employment rate is quite low. I think there's something interesting going on. I think that, a lot of companies are spending on the whole AI front. They're looking to reduce headcount across the board. The federal government, if you haven't heard, is looking to reduce headcount. So everybody's trying to become more efficient. One of the problems with that, of course, is workers need to work. So, there's this dual mandate of efficiency and making sure you're getting the most out of your bucks, and also keeping everybody employed. Because if people are unemployed, they become unhappy very quickly.
Yeah, and I'm sure that we're just now in month one of 2025 starting to see some of the effects of the deportation and the new immigration policy, which may have not spilled into the employment numbers or data yet, but the at least the news headlines and what we're seeing is definitely a big shift from what we've seen in the last 4 years. Do you see that having any effect on any of the employment numbers in a good or bad way?
Not yet, but I do believe that, come this spring, we'll start to see how that's playing out for us. So, the scoop is and this might be, I don't mean to be starting a conspiracy theory here, but I almost feel like, the Fed has a dual mandate. They are supposed to keep as many people employed as possible, but at the same time, they're supposed to control inflation. And for the last years, they've actually been able to do both quite nicely. They've, raised their interest rates and now they're slowly lowering them because they've got inflation somewhat under control. And then at the same time, employment has been good. I almost feel like because what we're doing here with reducing headcount, focusing on efficiency, is there's going, academically, we're going to see a rise in inflation. And at the same time, we're going to see a rise in unemployment. And that's going to create a controversy at the Fed, because then the Fed, if they pull one string, they're going to affect one side. If they pull the other string, if they go up in interest rates, well, then they're going to control inflation. But if they go down in interest rates, they're going to help employment. So it's almost like, you know, the current administration is trying to create that controversy at the Federal Reserve and make it hard for them to do their job. And again, this is just coming from my academic experience. I have no insider information, but I almost feel like this administration that's in control right now is actually trying to create this situation where unemployment starts to rise, but so does inflation, where the Fed has to choose. It's almost like that movie that I watched in the 80s called Sophie's Choice. Which one do I choose to help?
And the futures are telling us what, June for a potential rate hike? Is that the expectation?
Yes, yes. We're maybe there's a slight change, and anything can change right now, right? News headlines can go one way or the other. The executive orders keep getting signed, uh, and they keep getting challenged. There's people running around here in DC, 20-year-olds in black T-shirts that aren't giving their names, and they're firing people. So it's like quite crazy where I live right now. But the scoop is anything can change. But right now, you're right. June is the most probable next rate drop if everything stays the same. Maybe as early as May, but I doubt it. More like June, but anything can change, Sib.
Yeah, it's very I've never seen a new presidency cabinet start to take initiative on their policies as quickly as
I
I've
mean,
seen.
they got 2 years. They've got 2 years of like pretty much nobody's going to be able to contend them. So hopefully in 2 years they get it going. I mean, they're trying some black magic stuff, which it could be good, it could be bad. Who knows? But right now there's nobody who's going to be able to stand in their way. So they have 2 years to try their experiment, and I hope it
Yeah,
works.
and I actually have a few specific follow-ups on that. Before we dig into your pick of the week, we're going to do your review of the earnings play from last week, and also we've got our speed
Yes.
round. Like it's crazy because we've got all these stochastic events, whether it's a tweet or an executive order or this or that moving the markets, but then we still have our earnings, and we still have big players coming out with numbers and forecasts and things like that, and it's all being accounted for in the markets. Okay, but before we dig into all that, I do want to give everyone a chance to head on over to your quick links page to check out all the wonderful Trading Trainer resources. We've got access to our social pages. As we do the review, you see some of the indicators on AJ's monitor. We have access to that. You can register for his daily workshop. This is a great place to start your options and premium selling journey. So the link to that is there as well. And then, more about coaching and the Trading Trainer program, all accessible in this link. I put it in the chat. We're going to take a short break. We'll be back. I've got some questions on some potential things I mean, very news-driven headlines this week that may or may not have an impact on the market. Otherwise, we've got some plays that we're going to go over. So sit tight, folks. We'll be back in a few seconds.
Jiffy, say
We'll
a
be
jiffy.
back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
It's funny that you say that because I don't traditionally use that word in any of my day-to-day activities, but for some reason, when I get ready to play that clip
comes
of you
out.
zooming in the Tesla, it's like Jiffy Lube. We're speeding
It
through
comes
this.
out. Yeah, I love it.
Okay, I'm gonna go ahead and share my screen. I guess my first question is, okay, so Donald Trump has a new press secretary. Her name is Caroline Levitt, and she's a firecracker. I mean, she's out there seeming to be very transparent, answering a lot of questions, and if not being forceful to the messaging that they're getting out, and they're not really taking any baloney from any of the reporters. But the big storyline this week was this unraveling of this USAID, which I guess is a big government fund for special projects that nobody really knew anything going on about. And the specifics are really catching the mainstream. You know, for example, in this tweet, 2 million for sex changes in Guatemala, 6 million for fun tourism in Egypt, 20 million for a new Sesame Street show in Iraq. And so I guess my question, AJ, is you're seeing this, and is this part of the shrinking of government, lowering of the spending that could be good for America in the sense that could it bring down inflation because we have been, overspending in this capacity for quite some time?
Well, so the USAID, it's probably good that it has moved over to Senator Rubio, Marco Rubio. He's kind of a more level head, and so I'm glad that it's that. This reminds me so much of the 1980s. So I was a teenager in the 1980s, and there was a lot of hoopla around government spending. There was they were zooming in on small on projects and realizing that, hey, if you really itemize out how much the Pentagon is paying on projects, you'll find out that they just spent a $500,000 on a hammer, right? And these were the headlines in the 1980s. They were really, and the goal was to get the American people angry enough to, account for a lot of layoffs in the government, because they wanted to say government money is being mishandled and all that stuff. And it turns out that the contracts that they wound up focusing on were just chump change. And the USAID has a very big budget, but it's nothing compared to some of the other organizations' budgets. So I feel like all the stuff that was focused on USAID could have been done just because they wanted to almost distract, right? They almost wanted to, and sure, it never makes sense to do spending on those projects, but I think a lot of that is taken out of context. And it also reminds me, once in the 1990s, right? I want to say it was around 1991. There was a little kid who supposedly fell in a well, and the American public, you guys who are older might remember when this little kid fell in the well. or supposedly. Everybody was on the edge of their seat all over the United States. All the news media was covering this. It was on the 5 o'clock evening news. It was on the late night news at 11 p.m. It was on the morning news. Where's this little kid? Oh my God, it fell in the well, right? And then all of a sudden, right, the kid was found in a barn like a few feet away from the well, and we started to invade Iraq, right? And all of a sudden we're like, what? And so it's really easy to take something small and sensationalize it and get everybody on board with it, especially if you're trying to make a point while you're doing big things behind the scenes. And I almost feel like that might be what's going on with the USAID. Um, a lot of those projects, like you pointed out with that tweet, seem kind of silly, but most of the, USAID projects are important for keeping world peace. And they're such a small, infinitesimal part of the U.S. budget that canceling them or leaving them is not going to change inflation at all. It's like less than 0.5%. So it's like nothing of the budget. That's not going to change whether or not we have a deficit or a surplus by any means. It's like all of a sudden you found this little kid who's the big nerd in class, and now you're picking on him and you're leaving all the other kids. Everybody's focused on this little nerd. That's USAID. But can I say one more thing?
Yeah.
Before I met my wife, I was on one of these dating things like Bumble. I had a friend. I didn't know anything about it. She actually put me on these dating sites and was helping me, you know, and there were a lot of these people from international development. They're cuckoo. The ladies that I dated from USAID, and I hope none of them are watching because I'll probably get a lot. But boy, they're all very special humans that are very much into their work and doing good in the world, but at maybe the the sacrifice of their personal life. So it was just an interesting experience to try to date some of these people that are focused on USAID.
Yeah, I imagine some of the same character traits as the protesters that are, taking over highways and really messing up the traffic.
Yes, they are. Yes, they
But
are.
that is a good point on the USAID, where that it could be just a blimp in the bucket. So I'm curious to see what else comes. There is a lot of pushback from the fact that the richest man in the world, Elon Musk, is kind of at the helm of this, but I don't necessarily know if that's good or bad because
We won't know until it's done.
it's new, and at least there's some transparency, which is kind of refreshing. There was a second follow-up next or third day that was similar to that I was curious what your thoughts were, and that was the proposed tax cuts, in that Donald Trump is suggesting no taxing on tips, no taxing on senior Social Security, no taxing on overtime pay. I don't know what a SALT cap is, and eliminating some of the special tax breaks for billionaire sports. What do you think there's room for some tax adjustments to be made? And in this capacity, could that be helpful to the economy?
I don't think it's going to be helpful for the economy, but it's going to be helpful for some small groups of individuals. So, all well and good. These are just little amendments that are being made to this tax bill that he passed about 5 years ago that he'd like to get renewed. In fact, he's trying to renew this tax bill permanently, but it's probably only going to get renewed for another 5 years.
Interesting. And then there's always this talk of eliminating income tax. Could we as an economy survive without an income tax?
I mean, I could survive without an income
Well, I'm
tax. How
sure
about
we
you?
could. Yeah, of course. But would we be able to generate enough money to
So
um,
What this is talking about is moving from an income tax to forms of sales tax, right? And if you think about it, sales tax, whether you're rich or you're poor, you're going to have to buy a certain amount of stuff to keep going, right? So a rich person, if they buy eggs and gas for their car and, all the different things to survive, they're going to wind up paying the same amount of tax as a poor person, right? So you have to watch out. The reason why the income tax exists is because income taxes are fairer for taxing different economic groups, right? Whereas a sales tax, it's kind of almost like there was a time when John McCain, God bless his heart, um, totally wanted a flat tax, right? That was what he ran on I believe it was 2012 was, or maybe even 2000, or maybe even before that. I'm getting all my years, but he talked about a flat tax. And a flat tax really isn't fair because it taxes the poor more than it taxes the rich, right? But, rich people think that that's fair. They're like, "Oh, cool. I'll just pay a flat tax." But, it's so all to say, doing away with the income tax is usually a idea pushed by people that are doing better off because, a sales tax will affect them less than a sales tax. Anyway, don't get me started on income tax versus sales tax.
Well, I just did a Google search because I was curious. I was like, when did we start a federal income tax? And the year is 1913.
I was gonna say 19 it was during the Woodrow Wilson. It was in the early
And it's like, so
1900s.
so we operated as a nation for 137 years without income taxes, and in 1913 we needed them, and we've never revisited the idea of not having them. So very interesting debate, and we're going to continue to see the headlines because we are in a headline driven era in this fast moving 2025 year. And we here at Trading Trainer and Trading Trainer community are just trying to ride the waves. We're just trying to make a
That's
little bit of
exactly
money,
it.
a little money to the upside, a little money to the downside. This week's big earnings, I think, came yesterday with Amazon. But before we dig into anything this week, let's go ahead and review last week's earnings, volatility rush crush play in AMD. Did you end up triggering anything that we discussed prior?
Yeah, absolutely. I mean, so AMD had a little bit of a price action move. I did the exact trades that we're always talking about. I used and why don't we copy and paste this into the chat so people can check this out? I used my calendar spread, right? This is to take advantage of the volatility crush after earnings. You can see here on my chart that earnings were after the market closed on February 4th. So February 4th is when I went ahead and purchased my calendar spread. I used the $15 strike price puts, right? Because I saw a run up during the day and I had also paid attention. I did my research over the weekend. And so I went with the bearish sentiment on what the earnings announcement would do. So I basically, we were trading around $218. Depending on your bias on the earnings, you go either above or below. The strike prices were every $5. So I did 215 or 115. I'm sorry. I keep saying 215 because I'm thinking of another trade. I did 115 for the strike price and I used puts. It could have, I looked at the 120 trade. It wasn't that different from the 115 trade, but I did the 115. I used my back month option being the one in March, my front month option being the one that expires this Friday, February 7th. I wound up purchasing towards the end of the day for $2.81. And then in the morning, about 38 minutes after the market closed, I sold. I just set a sell order at $3.20. So I walked away with about 15% ROI, folks. Simply doing an overnight trade didn't affect, didn't trigger any pattern day trader rules, didn't do anything like that. Instead, it was just clean and cut and dry. I love those earnings plays.
Yeah, and I think we discussed that AMD is one of those that doesn't fly off the rails
It didn't go
every
off too bad.
off, compared to like an Amazon, which I saw Amazon, I think was down like 7% yesterday or something like that. So
Yeah.
that's AJ's review from last week. Your pick of the week this week, is this an earnings play, or are we setting up something that's a little bit more on the boring but still very effective side?
Well, and I'm going to mention his name because this was given to us yesterday. Remember, folks, if you're part of my premium selling program, we actually have workshops every Thursday. And this one came from Luis, and he is just the most amazing program participant. He's there every week. He's churning and burning. He's asking questions. It's fantastic to have people in our program, and I wanted to give a shout out to Luis. Luis raised all of our attentions to Ally Financial yesterday, and it's my pick of the week. And so I want to make sure Luis gets the credit he deserves for giving us the heads up. We're looking for getting in here at this top signal. We haven't yet got our follow through. I mean, maybe we got our follow through a couple days after, but it looks like it's possible to still get in here at the top. What we're waiting for is a solid top signal, and that's what we want to do. By the way, when things are getting a little bit uncertain day to day in the markets, you really, when you're setting up these premium selling positions, the initial position you do, we call it the initial covering position. You really want to take some time and get it in there. You want to make sure you've got all your signals aligned. You've got the confidence that the position is going to move a little bit in the direction you want it to. So that's where we want to start. We want to start either by shorting Ally Financial, or we want to buy some substitute option puts. And I went over here. I'm going to pull it up right now. I went over to my options lookup, and I'm thinking September. And I'm thinking, let me go ahead and pull up all my strike prices and my price components. This options lookup tool is just, the cat's meow when it comes to finding the right options to trade. I'm looking at this $50 put. I was talking to my program participants yesterday about the 55, but I'm actually more interested in this $50 put right here. As my substitute. So if I'm not shorting the stock, I'm going to be buying this put. If I'm already in the trade, it depends on what side I'm in. I could be rolling out protective calls, or I could be selling my put premium and buying my protective calls. It all depends on where I am. But if I'm setting up the initial position SIP, I'm buying those substitute puts, or I'm shorting the stock.
And so this is a great setup for premium. Do you have any, just off the watch list, off the top of mind, anything that you're looking at on an earnings for next week?
Earnings season is starting to dwindle. There's still some great ones coming. Nothing's on my radar, but I'm sure that won't be for long. I'm sure I'll find some things over the weekend for next week.
For sure. All right. So that's AJ's pick of the week, Ally, ticker symbol ALLY. And we've got a couple of names from across the country, a nice little layout of regions here. So AJ, if without further ado, let's dig into some of these names to see if there's a play, get your take on it. So Chrissy from Laramie, Wyoming wants to know about eBay, ticker symbol EBAY. Previous darling, don't really hear too much about eBay these days.
No, you really don't. Interestingly enough, okay. So I see that eBay is trading at about 68 bucks. It is kind of a sideways moving symbol. Let me go back a whole year, Chrissy. Yeah. Um, I think this would be a good premium sell. Is that what you're thinking? Let's see. Um, Maybe I can see that my fast MACD is having a hard time nailing a top. So you want to make sure you use the fast MACD in this case as a end of day signal, and then look for follow through the subsequent day before you pull the trigger. But I bet you're trying to either buy the stock, I'm sorry, short the stock or buy a substitute put. Let's see if we can find you a substitute put right now. So I'm going to use my options lookup tool that anybody can get access to right now. eBay, maybe not July. Again, I'm probably attracted to either the September or even the January 2026. And I'm looking over here in the put column, and man, this $85 strike price really is attracting me just from the get-go. I'm looking mainly at the bid-ask spread, which isn't so big, so that tells me that people are trading it, but I'm also looking at the percentage of premium or extrinsic value, and I want that to be low. And so I'm really attracted to this $85 put. You could get this for $18.03. And so I'm thinking that, you know, this is the type of put that you want to purchase when you get that top signal. So I would definitely be patient and get a solid top signal. But then I could see buying that $85 put that doesn't expire till September and letting this thing go down, making that put go up in price. And then depending on how far it goes down, I could then sell some puts and buy a protective call, subsidize that protective call purchase and create one of those collars that makes my trade risk free. Basically, it lets me just sleep at night and let time pass by and put money in my bank account. So I like eBay. I think we can do something with it.
Yeah, I feel like whenever I go on Facebook and I see Facebook Marketplace, I feel like that's been a big uh, solution to eating into eBay's business model, where people would resell things. And I see a lot of good stuff on there, and Facebook really doesn't even take a cut of it. They're just kind of the middleman. So, would be curious to see eBay's future evolution. But the
Might
setup
not be
there.
a might not be a bad thing to basically have, be shorting eBay.
Yeah, we'll see. It's one of those darlings that we don't hear too much about, as we mentioned. All right. Hopefully that was
I like
helpful, Chrissy. Thank you for bringing that to our attention. Our second name comes from Bill in Huntsville, Alabama, and he wants to know, AJ, your thoughts on SoFi Technologies, ticker symbol SOFI.
I like SoFi, right? They're a technology company. They've figured out how to get their books working. In other words, they're bringing in as much money as they're spending, which is unusual for a technology company. I like their product. They're a good thing. So I think we do the opposite of what we told Chrissy. We look for a bottom reversal and we look for an opportunity to buy some SoFi instead of short it. And if we don't want to buy SoFi, let me go ahead and again use my handy dandy lookup tool. Just put the ticker in. Again, September, January might be the two that I'm attracted to most. This time I'm going to pay attention to the call side. Yeah, I am loving this $7 call just off the top of my head. It looks like there's a nice bid-ask spread, but also we're low on the extrinsic value. So $7 call expiring next September or this upcoming September. That's what I would buy instead of buying the stock. It's only $8.15. The stock currently is going for about double that. So I get a little bit of leverage. So I would wait for my signal. Once I get my signal, I would go ahead and buy either the stock or those calls. And then again, as it goes up, if it kind of pauses, then that's when I turn it into a premium trade. I sell call premium. I use the proceeds to subsidize some protective put trades, probably around my break even price or around this risk price of around 14 bucks. And I just roll those out. I just make once a month or once a cycle adjustment trades and just start creating income off those. That's where I see that one going. I like that.
Yeah, every time I hear the word SoFi, I think of SoFi Stadium, which is probably the most innovative sports arena that I've ever stepped foot in here in Los Angeles. And so for them to get in on that early, to me, has tremendous value outside of whatever they're doing in their business. It's just a really good way to brand yourself. So we'll see
Exactly.
if that'll evolve into more customers over time. But it sounds like they're doing some things right over at SoFi. So thank you for that, Bill. All right, our third and final name is I don't know if we covered this last week or the week before, but Dave out of Houston wants to
Yep.
know what do I do now in AST Mobile, ticker symbol ASTS. Oh, this was those satellites that we talked about.
Yeah, this was last week, and Dave wrote in this week because he did what we said. We said go ahead and purchase on follow through of the signal. So he purchased on Monday, and he's asking, "What do I do now?" Well, okay. So I'm not sure which price you bought at, but it was somewhere between about 19 and 21, $22. So now you're trading up here. You got as high as about $28, $29. We're trading at about 26.69. You got some choices, but I almost think, why don't you take your money out? And premium sellers don't usually do that, right? Premium sellers typically will say, okay, sell your calls and then buy your protective puts and start trading this thing. And you could, I almost say to you though, when you buy your protective put, let's lock in. Don't just go at your break even price. Buy a protective put up here if you're going to do that. So, number one thing I would recommend is, hey, there's been so much appreciation in just the last 5 days. Why don't you sell and take profits? It looks like a lot of your other peers are doing just that today, right? They're taking their profits. That's why we're seeing some selling. That's going to be a great return. Take that money, reinvest it in something else. That's number one choice. Number two choice, we could probably sell. Let me just take a look at the option chain.
Right, because couldn't you sell that premium, that like a call, and collect a little bit and then use your stock as kind of the collateral?
Absolutely. So, you know, if we wanted to, we could sell a February option, and I would recommend the February 21 option. And I'd probably sell this 28 strike price. And so I would use that money then, and I would look at my chart and I'd say, how much profit do I want to guarantee to lock in? And I would pick that strike price. Let's see what we've got for protective options. So with protective options, you want to go about 3 to 6 months out. So I'm probably thinking April, May, even as far as August. Let's look at the May. So in the May, we're trading. I could do a $25 put. I would do that. So I would sell this 28 call that's going to expire, February 21, about 2 weeks from now. And I would use that money to offset this $25 put. That's currently running at 493. This put is going to protect us, but it's also going to appreciate for us, especially as this stock looks like it's going to come down. So no matter what happens, that put is going to be a good purchase. It's going to also appreciate. So you're going to get the money off of selling the call, and you're also going to make appreciation on the put. and the put is going to protect us should we dip down below 25 bucks. So I would do those two trades, or I would just liquidate this and take the money and run. Your choice.
Yeah, that's kind of a very interesting way to use this options tool where you can lock in a foreseeable profit. You can give yourself a little bit more room to gain, attract a little bit more profit. And then, if you do hit that 28, you own the stock at, 21 and whatnot. So that call would be exercised, but that's a good thing because you get some of the
You get 28
you get
bucks.
some of the premium too, right?
Yes.
So that's kind of how you add up those percentage returns to, I don't know what this would be, but similarly to the AMD, that was a 15%er. This one sounds like it would be a little bit more. So, just finding some of these opportunities.
You're learning, Sip. You're learning.
Putting this, hey, we've done 170 episodes. I'm almost a pro at this stuff, but
I know you're putting it all together. I love it.
And I like to then educate, some of my younger investors in these concepts with options because most new investors, even on the younger side, they don't understand options and are, the word derivatives seems a little scary, but I love taking our lessons and applying them to, more average guy speak. So that's AST.
I gotta tell you, Sip, my options lookup tool really makes picking these options really easy. You just need a couple of guidelines on how to pick the different options, and you're off to the races. I'm actually, right now, this options lookup tool is in kind of a beta, and I'm giving it away for free. I'm putting together a manual that helps pick, how do you set up the options lookup tool to do some different, to focus on when I'm selecting different options, to give people tips. But man, this tool takes the, a lot of people understand how to look at the charts. That's great. But now with the options lookup tool as a companion to any charting software, you've now got, an easy way to pick the options you need to trade those charts. It's awesome, man.
Yeah, and I know the team's working hard on some future versions of this. Exactly, because
you betcha.
From our discussions and research, there's not really a good tool like this on the market. So we're excited to be leading the charge in this options lookup tool. And when we go through those examples well, what options do I need for this? Going to this, punching it in, man, it makes it so seamless. So I'm excited to get this out into more hands. And if you out there in the Intersphere want to get access to this tool, head on over to the links page, click on that free indicator suite and sign up, and we'll get you information on how to access that options lookup tool. Otherwise, show some love on the socials. Hit that like, hit that follow, hit that subscribe, and we'll continue to update you as we get more updates because like I said, the team's working really hard and they think the software development and just development of things are just moving so quick. I mean, I've been messing with a lot of really good AI tools and they're just getting smarter and smarter, and it can follow your screen and you can teach it to teach itself. And so to anybody watching, we're really taking as much of that in as we can to help develop these tools. But for your own sake, maybe there's tools to make your life easier in other respects as well. I know for me, I do some of the video production, and just what you can produce out of thin air, in these AI models is crazy. So thank you for that, Dave. Hope that was helpful. AJ, looks like we're getting close to the end of our program here. Starting off February, coming off of earnings season, heading into next week. What do you have on your radar? What should people be thinking about?
Hey, I'm looking at every opportunity I can to sell premium. I'm excited about, some of the churn Whether, for us traders, it doesn't really matter how it ends up. It's more of finding the predictable patterns. And, we talked a little bit about how the anxiety actually is good for some traders. And so just make sure you're on the right side of the equation. I can't uh, emphasize that enough. Be on the right side of the equation. If anxiety is high, you should be selling options.
Yeah, and if you need to get the basics or if you want to learn more, head on over to that free daily workshop. AJ's got 4 awesome strategies to help get the ball rolling for you. Otherwise, who are you rooting for? Who are you rooting for? Are you going to watch the Super Bowl, AJ? Please.
Oh,
Oh,
yeah. Oh, we're absolutely having a Super Bowl party here. We're going to have the Super Bowl on in a few different of our rooms and just, let people mosey around. Whether we're going to have a room where it's just the Super Bowl, you're not allowed to talk. And then we're going to have a room where you can, and then we're going to have it on. We have a little, makeshift bar here. So we're going to have it on at the bar so people can have drinks while they're watching the Super Bowl. But anyway, I'm actually very interested because this would be the 3rd time if Kansas City wins 3 in a row. That has never been done before. So I like anything that's history making. But at the same time, man, the Philadelphia Eagles are scrappy. And this is, if anything, this is just going to be a nail biter of a game. So, I don't really have a side I'm going to pick. I'll be happy if either one wins, but man, it would be neat to see history made.
yeah, I'm excited, and I've been seeing some of the commercial previews coming out too. And Uber Eats did this big campaign with Matthew McConaughey, and their commercials are hilarious. There's this one where he dresses as Mike Ditka, and he does the voice, and I'm like, oh, okay. It seems like the creativity's coming. Like, I don't think last year we
Oh, the
had too many
commercials,
commercials, but this year I think we're gonna have some good ones. So I'm excited for that
some
part
good
as
ones.
well.
I saw one where Seal, the guy who sings that,
Kiss from
I
a
can't even, I'm
rose.
not,
Da, da, da.
yeah. And he's doing a Mountain Dew commercial and they CGI'd him or AI'd him or whatever you call it into an actual seal on a rock. And it's his head on a seal singing about, but instead of the rose, that he's singing about a kiss from a lime.
Interesting.
I'm excited. I'm also excited about the commercials and, of course, the halftime show. So it's just going to be a great weekend all along. And I'm glad that we don't have tariffs against Mexico because my wife's planning on having lots of fresh
Yeah,
guacamole.
and I mean that this is the essence of America. Super Bowl Sunday. Hopefully we could put aside all of our differences, enjoy some all-American football, root for our team, and head back into
Just
Monday
have
to
fun.
start making some money in these markets because that's what we do here at Trading Trainers. So
That's
thank
right.
you everybody for tuning in. Once again, please show some love, hit that like, hit that follow, hit that subscribe button. AJ, thank you for your time today. I hope everyone has a good weekend. We'll catch you guys next week.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content.